The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody. Keith Harwood here, ready to chat about the markets and what we're seeing today. Before we get started with that, let's go through the disclosures. Options involve substantial risk and are not suitable for all investors. Tradespoon and Keith Harwood are not investment advisors, not registered with the SEC, not registered with FINRA. If you do have questions about your personal financial situation, please consult your trade advice. Myself and or the team at Tradespoon presented in the trade ideas. So please keep that in mind as you go through evaluating these ideas for yourself. What we're talking about today is just some ways that these strategies may work. If you do have ideas or stocks that you want to look at, please throw those into the question box so we can review and see if there's something interesting. Because as always, I've got a list of stocks, but there's other stocks that I'm sure you guys are looking at that have some interest to you. The fight or flight response is clearly part of the market right now, debating whether or not to fight this pullback. There is a little less fight, I think, because of what's going on with non-farm payrolls being Friday and having been a trigger for pullbacks in August and September. Ultimately, that actually may set up a little bit more upside on Friday if the economic data comes in better. And then I think that we start to get people really into this market. There's a little fighting, like I said. But I think the general idea here is that people are kind of fleeing this market outside of the China market. And right now, oil. Oil got really aggressively bid, as well as military names like Lockheed Martin and Raytheon, as we go through the tensions in the Middle East escalating quickly and aggressively. So there seems to be a lot of chase trading going on in the market, chasing into those two real sectors, three sectors, defense and oil, as well as China. I'm not sure if the moves are done, when the moves will be done. The implied volatility of the market is telling me we're not seeing people betting on consolidation and any of that stuff yet. Right now, they are all aggressively buying calls, treating it like everything is GameStop, it seems like. But that actually also gives me some pause a little bit right now in China as I start to see a couple of names that really performed very weakly initially on the China gap and are now starting to get chased into. That may mean we're in kind of the eighth inning of the China spike trade. We may see some of those names start to pull back, consolidate, set up really good technical formations for the long run, but maybe for the short run, we're starting to get into more of a chop. That said, FXI is still up significantly again today, but not the 9% that we were seeing last week. Okay. Always remember that portfolio drawdown is a big element, and it may be causing some people to flee the market right now, particularly in tech. We'll evaluate some of those names as always today. Probability of success and return on capital. I will stress that I believe that there's probably a lot of potential for return on capital. They're not easy trades in some of these chase type trades, the China trade, the defense trade, the oil trade. They are not easy trades. There is an attraction because of the potential return on capital. If we repeat some of the moves that we've seen recently, the probability of success drops as we get to that because we could easily see a large update or profit taking causing and or in both the stock and or the option market that brings down implied volatility, reducing that probability of success. So structuring the trade correctly to factor in those elements is crucial right now. And we can talk a little bit more about that as well. Using spreads is a big element of improving that probability of success when we've got implied volatility at extremes. 2 to 3 days to confirm the trend change. It really does feel like right now we are getting into that pullback in tech, but that can all, like I already mentioned, be unwound if non-farm payrolls come out positively on Friday. Then we start getting into earnings. Then we start talking about how that next quarter of data looked in terms of the economy? Are things really looking strong for, financials? They're going to be early on. Some of the airlines are going to be early on. And then we start talking, of course, the big stuff, tech. And tech, I think, is still a driver of this market, but it's a little bit less so because people right now are searching for something else, something new, something exciting, something interesting, whether it's China, whether it's oil, or, could be the back into that small cap trade. We'll review a lot of that stuff again today, as always. And like I said, JD, Bob, you mentioned that again. I keep looking for some real profit taking, and I'm not seeing profit taking there in JD, and that kind of shocks me. Maybe there are more spreads out there in the positioning than I expected. Maybe it's more buy rights and call spreads and things like that, and that's preventing people from necessarily just liquidating their positions, taking the big money wins. Time will tell on that sort of stuff. Allowing more time is always a nice benefit, but when you get the VIX up a little bit more, it's not near the lows of the 14s. It's getting higher. That makes those longer time expirations a little more expensive, but we can still look at that as well. I don't know that I want to necessarily get aggressive positioning in options that expire on October 18th anymore. We're talking about 16 days to expiration. Getting into November can be good. December, if you're looking for a trend, going even out into 2025 options, January, February, March can be a way to help stay in the trade. It's not going to have as much of a leveraged return as shorter dated options, but that's that compounding interest idea, improving that probability of success. These ideas, allowing more time and more space, improve that probability of success, even if they can reduce the return on capital for a short-term move. All right. If you're trading off short-term moves, these are not necessarily as crucial, but understand the risk associated with those short-term moves and short-term options. And I never like selling naked options. I mean, if I had said, a week ago that it was a pretty interesting looking opportunity to just naked sell calls and FXI might blow out an account. I don't do that. I don't think it's a smart idea. Consider the risks of those naked options if you ever do get into that before you start to get into a strategy with naked options. A lot of people like to just sell puts to collect that premium. Understand that cash secured puts are a lot more safe in terms of the account value, but a lot of people do like to sell naked options. I prefer to do a put vertical in that sense, taking a credit spread, taking in the premium, but defining that risk so that in case we see something like what we just saw in Humana, I don't wipe out an account. All right. And with that, Bob, catching up with Baidu, good job. So I don't like chase trading. That, like I said, it can be a tough trade at times, but Baidu is doing well for you, and I'm happy for you in that sense. I mean, that's a great result here right now. And Baidu, Bob, JD, if you got into those, even on the chase, it still feels good right now. Just be very cautious about using some sort of trailing stop would be my normal strategy in that sort of sense. Knowing when to get out when this party is over is big, because otherwise, I mean, if this term turns even more meme stockish, GameStop-ish, you can see this big pullback that almost negates a lot of the trade. I don't know that that's going to happen fundamentally in China. I don't believe that that's fundamentally going to happen in China, but I've been surprised by the market before. All right. Can't quite call the bottom in these semiconductor names. I think the fundamental input of Friday is going to is probably going to give us a bottom either way. Bullish non-farm payrolls means that, today was a good buying day. Tomorrow might be a good buying day. Maybe if it's only up a little bit, Friday can be a good buying day. If we get liquidation, that actually may set up a buying opportunity, because that's what we've seen on September 6th and August 5th, I believe, August 6th and I'll double check the dates. But off of non-farm payrolls the Monday in August and the Friday in September. Okay. Try to be flexible. This market is doing a lot of rotation, a lot of different moves. We got to just try to find those sectors that can continue to perform. 1 day, 2 day kind of moves aren't really always good to trade off of, but sometimes they can be. Sometimes they can be setting up even just a higher probability in the money debit call spread, understanding that there is support in these markets. So with implied volatility high, I like those strategies for some of these more explosive stocks. And again, I can review a little bit more on how I tend to structure those for this kind of setup. All right. And with that in mind, let's go straight to the markets. I'll come back to oil here. First, I want to start with just the 10-year bond yield. 10-year note yield is testing that 3.8, trying to get above here again. We're in this little inflection point, whether we want to stay in that 3.6 to 3.8 range or go towards a 3.8 to 4 range. Overall, I don't see anything too concerning here still, though. That's not necessarily a market problem. There's just a little bit of a pullback in bonds today, and it's not necessarily a good or bad thing. It's just right now in I think a general comfort zone for bond yields. The VIX is showing that we're starting to get a little bit of discomfort in the market. We're starting to price in a little bit more activity between the action that we're seeing, the last few days, as well as that expected volatility off of Friday's number, as well as the expected volatility off of some of the earnings, expected volatility off of an election. That's all starting to come into this VIX market. That can cause some risk reduction as people sit there and say that they don't want to be max allocated into a market that has some fundamental inputs that could really shift their portfolio significantly. Yeah, continuation as opposed to chase. That there's a very different way to view some of those. Like I think of chasing maybe being more of what we're seeing in JD at this point, but it's working. All right. I also like to look though at with volatility in the current situation. SDAX, this is the skew index. Again, it compares the puts to the at the money implied volatility. And right now we're seeing people chasing puts, going after these puts, buying a lot of puts, trying to hedge a portfolio without exiting. It just seems like right now that's been a big trade. And then the skew index, which compares the puts to the calls, we're seeing that up as well. So very similar. People are buying puts, kind of ignoring the call side on the broad market on the S&P 500. Not necessarily get the same case, of course, for some of these major rallies like defense, oil, China, but that doesn't get priced into the skew in the SDAX because that's built off of the S&P 500. One of the big ones we got to keep watching, of course, is always XLU. And utilities are getting a little bit of a pullback today as we touched near the highs of that trend channel. I talked a bit about NEE yesterday near the close as a trade that I had missed out on. We may see a new opportunity here. We're getting a little bit of weakness on the open. I do believe that these utilities do have a place in the portfolio. I was looking at entering around 84, the lower end of the trend channel for NEE, and I missed out on 84, and then it went to 85, and I didn't jump into it because we didn't really give me justification for that in the utilities type trade. Are showing some signs of needing some allocation to that portfolio. Southern could be an interesting one for me, and I'm going to look at that a little bit closer today, looking for a call spread. All right. Maybe I get a jump up like we saw right before non-farm payrolls in September, like we saw right before earnings and non-farm payrolls in August, and then consolidation. So even though the XLU has a more trending style to it, Southern seems to do a jump and then sit. So I'll be looking for some potential ideas here that could give me that $2 to $3. I could really make this sort of, binary and get lottery ticket $91 calls. Might be a way to play it. More likely, if I want to do this, I do want to start kind of adding a couple of utilities to just hold as long as that trend channel is staying in place for XLU when it is. So I'm looking more in the November range, and then that gets to a call spread. So I just want to keep that in mind. SO may not be best for a call spread. NEE would be a better one, I think, for a call spread given the overall trend and the percentage of the ETF that is in NEE. So something like an 85, 92.5 call spread could be a way to execute that. We're getting close to my previous attempted level on the 85 calls. If we get down towards that 370, 365 range for those calls, I can look to buy those now and then into a rally, sell the 92.5 calls, or into a sell-off just cut the trade off the 85s. So if we fall off, it means the trend is no longer in place. I sell them out. If we rally, I turn it into my call spread. So for now, not quite at my level, but something to watch for me today. If we get a little more pullback in utilities, and start to unwind a little bit of that rally that happened from about an hour into the day until basically the close in NEE in particular. But utilities are a boring trade. Let's talk a little bit more about what's going on that's exciting. SPY pulling back again. We now have lower high and lower low for the first, and there you go. The second, yesterday's low is 566. I will be a little bit surprised, honestly, if we don't go a little bit below it. Ultimately, we do have some good support levels here around 565. I gotta tell, I'm not sure I see this holding before non-farm payrolls. I know it's only the 2 days. I'm nervous about this market and the potential for some extra liquidation here, given everything going on. We are seeing the MACD getting that crossover today, just like we saw for non-farm payrolls in September and mid-July when we peaked in this market initially heading into the non-farm payrolls for August. ALGT is looking good. I'll come back to airlines in a minute, Bob, and some of these other names that you threw out here. Add into some of the defense and the oil as well. So you're still having a good one here because oil is getting some follow through today off of the concerns in the Middle East. We'll talk a little bit more about some of the broad market and then get into those sectors. The Qs pulling back again, same sort of idea. Yesterday's low was a pretty excessive sell-off, but given another day or two, I don't know that that's going to hold. So I'm still leery about this. Not that I want to position bearishly, but staying nimble in the tech names, especially given what we're seeing in semiconductors. Little bounce back today, but lower high and lower low 3 days in a row. That doesn't give me a lot of confidence. I need to see more of a bull flag. If semiconductors can get back towards 245, 250 off of non-farm payrolls, I can start looking more aggressively at the NVIDIAs, AMDs. Micron has pulled back significantly after earnings, just off of the semiconductor pullback, and maybe Micron could be a way to go for me there as well. Even though I've had some, hit and miss there, but that could be an interesting name to look at. I think there's probably higher probability in NVIDIA just because everybody always seems to love NVIDIA. All right. And we're right where we probably needed to get to in NVIDIA, to be honest. I mean, this 100-day moving average, the 114 range looks like it should provide some support in the mid-September lows. But we did get that pullback and a little bit of follow through after non-farm payrolls in September. Of course, August, we know that was seemingly disastrous for a lot of these big tech names and the big tech sector allocations that have been large positioning for a lot of people. And then finally, small caps. We've got just a lot more chop here. There's nothing really particularly interesting about the small caps today. They're not a main focus for people, but financials do start up a lot of earnings here shortly. You can see we've got, Bank of America earnings, I believe are, the 15th. So about 2 weeks. JP Morgan earnings coming up here as well on the 11th. So people are going to start looking at that earnings data from these bigger financials and seeing if that can start to generate some more interest in financials. And then maybe even into the small cap financials, the Regions financials, the Zions. You can see we're sitting near the highs. So if we start seeing good data, even out of the big banks, I think that can give a little bit. Let's be prepared for that. But that's homework for another week. So right now, a week or two away, I think, from a lot more of the financial allocation. So in the meanwhile, let's get the movers. China, another $2 today in FXI. It's just been almost insane how much we've moved in China here. I thought it was insane to get to 30.5 based in that one big day here from 27.80 to 30.5. Now we're getting another 5.5%. It's a smaller move, but it is still a large move. I mean, we've had big moves, a few days of somewhat consolidation, and then another big move. When will this end? I don't know. I'm going to let the market tell me. And I think the biggest signal for when this will end is when I start to see more profit taking in the options, as I mentioned. JD, I think, has just been a stellar performer here. And we're starting to see a little more volume here on some shorter term options, taking off some in the money options. That seems like maybe an indication of some profit taking here is certainly possible. The big strikes are in, here we go. Sorry, it was January. A lot of big strikes here in January, a lot of big volume on those January 35s, and that's been a growing position. It looked like it was a buyer. It looks like that's continuing. Maybe it's somebody hedging a short position using in the money calls. I'm not quite sure why you'd be buying into these 35s unless you were short them, but ultimately it seems like somebody's been buying into these in the money calls here, and it's pushing the stock even higher. With implied volatility where it is, I'm not sure I love that trade of buying the Jan 35s, but it's working on a delta basis. So if somebody was just doing that as a stock replacement, maybe that's the motivation for that. I do think 35 could be a good support level, but that's a long way down. 20% pullback to then get stopped out of a position buying these far in the money expensive options doesn't seem like the best trade out there to me. Frankly, I'd almost be more inclined, or I would be much more inclined to look at something with a in the money call vertical. But to get to those clear support levels, unless I can see clear support here at 40, and it's somewhat support here at 40, I gotta go lower, and going lower means I'm not really getting any real return on my capital. A 35-40 call spread is going to be going for about $4.50 already. Sure, it's got a good probability of success. Sure, I could probably ride that up to 490 or 495 and just hold it for the 2 weeks. 10% in 2 weeks is not going to kill me. It just, is that the best utilization of my capital today? And for me, I don't think so. 1-2 kind of day trades make a little bit more sense to me. Baidu had been lagging. It's got a little bit of a catch up today, trading right at the highs. So awesome if you got into that one, looking for that catch up there. Baba, new highs. But I've talked about this before, and I'm seeing it more even today. Its implied volatility is double what it normally is, and this isn't because of earnings. This is because of movement. Realized volatility is there, so it's justified. But God, is it hard to chase into that stuff when, there is likelihood of some smaller moves now that a large chunk of this move seems to maybe be priced into this market. Okay. Wow. NTES. Implied volatility there, spiking as well. Jump into with the options like I mentioned, with that implied volatility spiking. I think that, again, you've actually got probably clearer support here in NTES around 92.5, 93. And I'd be looking at those in the money call spreads as long as and there's decent enough premium here to maybe justify doing something here with an in the money call spread. Like an 88, 93 call spread. The markets are wide right now because everybody's still pricing out the open, and look at that for $4, that seems like an easier way to make some money here than looking at an FXI and the money call spread. So NTES now has a little bit better cushion to the downside, and I think it's still, that can be a way to justify and look at participating in some of this China bullishness overall. Okay, so finding those good support points that have a little bit stronger support is key for this market, and NTES I think actually could be a good one for that, since we are in this. Our support from yesterday and the day before is very much within the, all right. Let's go to, what do you want to do next? I don't want to do SMH quite yet. I'll do those airlines since they were mentioned. Earnings on the 15th, as I mentioned. This is that kind of pullback trade that after a spike, that now I could be looking for support as long as I'm looking for options before earnings. I don't know that I want to play earnings in these airlines. We saw them get hit, generally speaking, on earnings. Delta earnings were particularly bad timing because I had a bad day. And then we had the non-farm payrolls afterwards to give that follow through. But the non-farm payrolls in September did not impact airlines. So maybe a little less concern for this week. But I don't see a bull flag yet. Obviously, we're seeing the pullback still more today. I need to see higher highs and higher lows. I think this is getting impacted by oil more than anything. And we're seeing oil prices now getting up to that point where on the short term, I'd say it's a little bit overbought. But on the fundamentals, I don't know where the stopping point is for oil. We're above yesterday's high. We are trading right here at this 200-day moving average, getting back into this range. And maybe that's all we're looking at now from here in oil is a range of 72 to 79 again for USO. We're near the lower part of that range, but getting these spikes off of news is definitely causing some panic buying almost of these oil names. OIH, you see sitting here near these highs, near this 50-day moving average that has provided resistance a few times in August, here in September. So flexibility and caution with these oil names as a result of that, because the broad market pullback is going to have some impact still on these oil names. If people start to sell everything, that's good because it starts to show a sign of the bottom. Names, even if USO and oil prices are going higher. Along with that, we are seeing gold unchanged today and silver catching up. So we see silver back here near that 29 and change range, a little bit better performance out of silver than in gold. The miners, let's see, where's GDXJ up here? Here's the juniors, down small. Doesn't make a ton of sense to me other than the fact that people are selling individual equities. With China's bullishness, I kind of think that these are a name that can still perform well. I do still like the NEM, but I'm in October. So if non-farm payrolls wipes that out, I'm going to need to look for the exits here. NEM has had support here at the 20-day moving average. We touched it again a couple of days ago. We're holding that for now. Friday is going to be the big day, I think, for me determining whether this is going to still be a good enough trade to justify. I'm in the October 56.60 call spread. It's got some good leverage. I'm not necessarily looking for new highs. The 60 calls may or may not be worthy of selling today if I was initiating brand new, but the 56 calls I think do provide some leverage if we get to a new high for GDX off of this general bullish precious metals trade. The other one that I did the trade yesterday in was CCJ. We're seeing uranium touching those highs again, up 16 cents today. I'm in the CCJ November 50-55 call spread. Got in around 48, so about a buck ago at $1.45 in the spread. Right now it's up to about $1.65. So paper win for me right now. It's all on paper because that can change. But I like the fact that this is above all of these key moving averages. The previous high was 49.28. Today's high on that open was 49.27. There's light resistance there, and then I start looking for that previous high as my next resistance point. So CCJ is a name that we've been evaluating, talking about for a week or so, and I think that this is a good spot for me. It's a safer way to get into some of the China derivative trades, and I think others were, helping highlight some of this name. So I appreciate your guys' thought process here as well on that, of course. UEC is another one very similar, and it did make a new high today. A lot of resistance around 7.5. It's a harder trade to make in the options market because, if you go to November, there is no half strike. A 7-8 call spread, maybe something to do with there, but it's trading in nickels and dimes on a $7 stock, so it's a little less liquid, and I think that would be more of a stock-based trade. All right. Back to those airlines. AAL had been the one that I've been looking for a November 12-14 call spread. This never really got to a point where I wanted to get in. I was a little tempted there, a little tempted the following day. I wanted to see what would happen on Monday, and we pulled back. And then Tuesday we pulled back, and then Wednesday we pulled back. Now more likely, I think waiting on the big airlines in general is my strategy. Love might be a little bit different because it doesn't always trade with the rest of the airlines, but it is still in a choppy mode, really consolidating here around that 29.5 level. So again, more of a wait and see there. ALGT, because you mentioned it, Bob, that's been a rock star, continuing to go higher. And, you know, if I just use a trailing stop of maybe every day, take the previous day as low and watching those bigger airlines, you know, that might be my ultimate exit there for ALGT. Taking profits now there's nothing wrong with that. But at the very least, having a trailing stop in place where if we stop making higher lows, it tells me that maybe this initial move there is coming to an end. So we'll see how that plays out today, down 2%, but it really puts us in the middle of the range yesterday. Okay. Yeah, let's do Bitcoin. We're seeing that risk off there. So we can see it in BITO or GBTC for the ETF traders on it. But let's pull up Bitcoin overall. Up a little bit today. That does not mean up though, because 70. Monday was bad. Tuesday was worse. Today, finding support here near these moving averages. It's a kind of nothing consolidation day, to be honest. I want to see prices back above 63.5 to justify a Bitcoin related stock trade. And we saw them get crushed yesterday. Coinbase, just a disaster of a day yesterday, a little bit weak today. Mara got hit hard yesterday, right down to that support level of the lower part of the range here for September. And Riot, same sort of idea, trading near that low end of the range from September, other than the non-farm payrolls ultimate low. If we start getting risk on and or just seeing a weak dollar, maybe that can start justifying some more aggressive positioning back here in the Bitcoin names. But right now they are very choppy and not getting the follow through and that momentum and a one directional trade, which is a bit concerning for me in my positioning in Mara and Riot. Okay. Some big movers today, just to keep on your radar. Humana getting hit hard off of updates on some Medicare things. It's basically a 2-day move here from 300 down to 2. I don't touch this stock personally. I think it'll find its value and then consolidate a bit in that sense. We do have implied volatility up. We do have some time earnings. But, you know, we had the big move down yesterday. If I started looking for a defined risk trade with like an in-the-money call vertical, I'd have been completely wiped out on it today. So I haven't seen a bottom yet. I'm not calling a bottom there. You know, it kind of has that same SMCI kind of impact for me where we get a move. Humana's is bigger. But we get a move, maybe a little consolidation bounce back, but this is setting up more like a bear flag than if we get below the lows from the 26th, that's going to be real nasty. That's $2.50 away. I get that 6%. Average daily move is 5%. So the expected move is 5% on just random walk behavior. That can trigger some stops here if we start to get lower again. So a lot of caution in a lot of these names because of all of the fundamental inputs coming on globally right now. But, you know, we can still look for those names. Like I said, I mean, NEE, CCJ, I think can still trade well in spite of that. And very much good performance out of energies, like you mentioned, Bob. UNH coming back after touching the highs. Let's see the implied volatility here. 29% earnings in 2 weeks. I'm not sure I see anything major in UNH to trade here. Clearly there was a spike, but then that fade back. Not sure that there's anything clear there. Let's re-examine LLY because I started looking at that yesterday. 100-day moving average really looks like it wants to be support here. So I'd have a stop at 860 and maybe just a stock position with a move back towards 920. So LLY could be an interesting one here if we do start to see some money flow back into these names that, again, are not going to be quite as impacted by the global fundamentals. But Novo, I always want to say Novartis, is making a new low. That is concerning. LLY looks significantly better. But if I start seeing NVO back into this 119, 120 range, maybe that can also put a better signal for me to cover to the 920 range. All right. NEM a little fall through today. NE a little bounce back. The AI names got hit. It's no real surprise here. I tend to think of them almost like trading Bitcoin to the same extent, and technology and semiconductors all kind of hand in hand. Path bouncing a little bit. So my November calls still have some hope there since I've got a month and a half. AI, really nasty yesterday. That if it can't get a good bounce back here again through Friday, it might be time to walk away because that 50-day moving average sloping downwards really showed some resistance here at first. I need to see something bouncing back towards 24 to really like AI going forward. I'll hold it for a couple more days and see how it plays out. The morning activity is interesting here. So let's get into the intraday chart here for tech. Looks like there's some fight in this market. We had that bigger pullback and then bounce. We basically touched yesterday's low. Yesterday's low again was 477.40. And we seem to be holding it okay for now. So there's some, I'm starting to see green showing up more on my watch list as well as on the sector list. So looks like we're seeing people treating this like a buying opportunity rather than a selling opportunity, which could be good for the bull and a little concerning for the bear. Megatech Apple looks relatively weak. That may be destined for a move back here down towards the 220 range. So buying opportunity may be a little bit further below here as a result. With implied volatility high and realized volatility not matching it, this could be a candidate for that in the money call spread. 215, 220 call spread. It's about 375 right now. So leverage to it as long as that support level below holds. So maybe Apple could be an interesting idea from that sense. Yeah, 215 to 220 is kind of all in the range of that that support. So if I wanted to get aggressive, I think the 215, 220 call spread for October could be interesting. If I want to be a little bit more cautious, holding off through Friday's number, I think is a big strategic benefit for a lot of these names. Okay. Oh gosh, the pink sheet. I forgot about PAUIF. How high are we at now? 165. Awesome. That one looks really good. Of course, no options. It's very much a stock trade. Getting up here towards 175, 180 is probably a decent spot to be out unless you've got a long-term fundamental. The liquidity of some of these other uranium names makes it easier to trade since I can do the options to define my risk. But overall, it looks like there's definitely some buying out there. And that's everything getting sold. That gives me a good sign for the bottom. But ultimately, if non-farm payrolls isn't bad, there won't be a selling of everything. The casino names still look decent. Las Vegas Sands, a much smaller, much more muted move to the upside. I imagine Wynn is the same. Small muted move to the upside. MGM is the one that I've been looking at closely here. And if we get, and we are, this setting up a little mini bull flag for me. And it gets interesting here if we do see any more follow through on the casinos. I think MGM, I was looking at the November 40 calls before. I'm going to look at those a little closer this afternoon if the behavior continues strong. And the reason behind that is that really I don't see much resistance once we get above this 40 level until we hit at least 43 or 44, maybe even ultimately to 46. So I can go into the November 40s and then start looking at rotating it into a call spread by selling some 45 calls. If we get to 41, I want to turn this into a call spread. If we start to fall, I want to stop out. It's that same idea I was talking about with NEE, where I want to start with the outright option, start with the outright call, and rotate into a call spread as we start to recover from this, or start to show that my trade was right, and that it is more of a trending move as opposed to a gapping type move. BYD that we had looked at as well. Let's see what that looks like. So BYD has been much more muted on it. Remember the Boyd, it was BYDF. This is the one that FXI holds, and that's spiking much more. That's more, it looks like that's more of their China operations. BYD is much more Vegas centric. So maybe part of the reason that we're seeing that impact is that people aren't going into BYD because they need to go into the BYDDF if they want to trade the China move. Support does look like it should be around here though. And that can set up just a move back to 66 if all these casinos continue to get bought. So something to watch there. Might be getting into some of its last legs. IQ was performing better this morning, pushing towards its recent highs of its range. And this is just, it's one of those stocks that has been weak, looked like it's going to zero, and now people are buying into it. They're looking for anything that has China to it to buy. That's a bit concerning to me. Maybe a little mini red flag. I wouldn't chase into IQ, I guess is the net of it. I don't think that I'd look to just, short the stock or trade for the bearish play very easily because the implied volatility is high. But if it's going to go back to $2, I can still make some money in November, 33 cents, sell them out when they get to $1. Because ultimately I just don't know that I can see a justification for its move, and it may only get to, back down to 2.5 or 240. So it's not a big trade. It's just something I was starting to play around with this morning and about an hour ago. And I want to kind of play around with that a little bit more, looking for maybe IQ to be an underperformer in the China consolidation trade if that starts to get a little bit more rational behavior. Call on PLTR. I hadn't looked at that much here in the last few days. That reaching its conclusion, got the RSI back down, had the MACD crossover, but so maybe there's a little bit more consolidation here to do, but not too much. Back here, it looks okay. 38.25 looks like an initial target, just the previous high. Ultimately, maybe a little higher. Let's see, earnings on the 31st. It's been about a 50% volatility realized. Earnings right now say 59%. So, just a simple call spread here, like a 37.40, could be an interesting idea. We get about halfway there with just touching the new high. And then if we break out, that $1.20 call spread is 40% of the max value. Once it gets to 70 to 80%, I'd look to exit. So it's a potential doubler. It's random walk. I would say it's probably about a coin flip to see if I can get it to double. But if I see that technical formation, maybe I can increase those odds to 65 or 70%, and that makes that worthwhile. So good eye on PLTR there. I think that could be an interesting one, and I'll write that down for continued evaluation here today, since it is doing what it needs to do to start setting up that next leg higher. But yeah, that looks decent. So I like that. We are seeing BITO unchanged now. AI getting a little bit more flow during the day. That's good. Still has a long ways to go to unwind yesterday's move. Bitcoin names starting to bounce back. So we're bouncing back in some of the big hits from yesterday. Overall, it looks like the market's going to fight this pullback for Wednesday. So, we're seeing even, Micron and some of these other semiconductors bouncing back today. So it looks like a day the market's willing to fight. So if I'm just trading for today, I wouldn't be surprised now to see another potentially 1.5% out of SMH get us back. That could be good to see, and then that could put a little bit of a tail into SPY to push. So that's good. Gives us a little more room back to that support at 565 to help that hold potentially through non-farms. So all of that looks pretty good. What other names were we looking at? Airbnb. That was looking bearish, and it's getting a little bounce back today, but not much. So this one doesn't look like it's clearly finding that support yet. I think I didn't end up executing the put spread here when we broke through 128, but I think that can still be justified for a hold, looking for that 119, 118, 117 range on the downside. So not much there. If looking for bullish, I'd just be a waiter on that one until we start to see a bull flag, which we're not seeing yet. Altria sideways, nothing particularly interesting there until we get back above 51.5. Philip Morris is going to look very similar. Again, looking for above 121.5, 122. Another name that hasn't gotten poor performance off of non-farm payrolls that I was started looking at yesterday. Accenture could be an interesting entry point here. I got a higher high and a higher low, but ultimately had bullish earnings. Now could be setting up for that new high in Accenture. So this one is one that I think is really worthy of a close look for some continuation after earnings. It didn't, like I said, get hit much on the non-farm payrolls in August. Didn't get hit at all for the non-farm payrolls in September. So even if non-farm payrolls are showing a weakening economy, the consulting field apparently is just fine. So looking maybe out to November with a 355, 370 call spread for $6. It's a lower volatility stock, but it seems like a safer play in the current market conditions. So when I'm looking for safe plays, Accenture and utilities have to be near the top of my list. As a result, I just got to get the today because we do have the higher high and higher low. So maybe a late day, as long as we don't see market liquidation, Accenture could be a decent one to add into. DOYU. Let me take a look with it. It's China, right? No, I don't even. So game-centric live stream. Okay. Is that Hong Kong, but something like that? But okay, yeah. So this looks interesting. I don't know what caused this big drop on September 3rd. Do you happen to know, William? We had the big drop or big spike on July 3rd, and then this big drop 2 months later. Technically, it looks pretty good. Probably not very liquid options, is it? No, not at all. Okay, so not an options trade. We only have one expiration. I wonder if there was a corporate action or something weird here. I'd have to figure out if there's something fundamental causing this to be so strange on its gapping performance. But if I use 10.5 as a stop, I can just do it as a stock trade and look for 10.5 to be the stop on the downside. And then that would just be riding a trailing stop. So I'd say, stop with a 10.5 stop is an interesting way to do you, however you pronounce it. Caterpillar. That looks good here too. Good thought there. Above 400. It may see some stalls at 400 just because we always seem to see it in these big round numbers, the hundreds, the tens when you're going from 30 to 40 to 50, and then as you get close to 100, it's 100, 200, 100, 150, 200. But it's having a nice performance today. 0.75%. Normally moves around 2%. earnings in about a month. And so there's the earnings premium in there. Since I probably wouldn't hold it through earnings, I'd look at the October 25th options to give myself some time for that to continue to go up. Look for like a 400, 420 call spread for just under $6. That's a way to play out that bullishness in Caterpillar for some follow through as it's starting to see some money flow right now. So 420 in Cat. Nothing crazy on the open interest to concern me in Oct or Nove or Dees or Jan. So there's no real option focused resistance here. I'd say just a round number of 400 could be a little bit of just a round number where people like to take profits. But certainly worth a watch here at the very least, and maybe something in that October 25th or 420 call spread. Let's see, what's Bowen look like this morning? Nothing yet. Still looking to see if we can get through that 20-day moving average. The benefit of this type of setup is that we have a falling resistance. So if we break through falling resistance, that could set up a move to 172.5. So I want to continue to watch that for a move. Is actually going to turn into some buying move towards 170 to 172.5 range. Again, that's most likely to be looked at via call spread. The pricing in the earnings to be before October 25th, even though my estimates is the 30th, based upon that ball bid we're seeing on the 25th relative to the 18th. And I probably won't want to hold it through earnings. So as much as I want to trade this off of that technical potential for short covering, I don't know that I want to do Boeing. CMT. Oh, no, sorry, CMI. I was going to say, I don't see a rally in CMT. CMI. Cummins. Yeah, very similar to Caterpillar there in that trade near the highs. This could be setting up a breakout. Late October earnings, monthly options. So I will have to hold a November option instead of in October to do something here. Same sort of idea though, 330, 350 or 330, 360 call spread could be a way to trade that little bit of a breakout a possibility here in CMI. So that's touching the highs, consolidating nicely. I'd like to see prices above, call it 328 to start getting in there. 22, then there's nothing here. So $3 down or $2.50 up, and then I start to get more excited there. Let's look at Nike post earnings. Bearish, but not massively so. Right back here to 82. Didn't quite get down into the range of the butterfly. Let's see what that butterfly looks like though now on the put side. And it's basically just the put here. It's 28 cents. So they're hitting the volatility, getting these options cheaper, effectively pricing no more movement this week. I'm not sure that's a great trade strategy. Open interest is going to be on the 80 puts more than likely. So maybe it's just going to drift down or drift back up to this 85 level, 4 level. But I'd say odds on for this would be looking for 80 for Friday. Unfortunately, if we get it back up, we'll watch to see if the open interest starts to build on the call side. But right now, there's really nothing crazy in Nike to trade today. Let's see. ConAgra had earnings this morning. This is a big move for ConAgra. Wow. So here's one of your wild earnings moves. ConAgra normally moves around 2%. Today it's moving 10%. So 3 standard deviations from the normal implied, 5 standard deviations from the normal realized. This is a big time bad day for ConAgra. Now down 10%. So I want to see how that behaves off of that fall. Kind of reminds me of what we saw in Ford for earnings. the drastic drop down, and then we started getting follow through. So if I see a lower low tomorrow, maybe just trading for that grind down for the next week or two. And if non-farm payrolls is bad, that could put a little bit of gas into the bearish move in ConAgra. I don't really see much support here until you get to 28. So it's a smaller trade, but I'm looking for 28. Yeah, there's not much premium in these puts. So, I mean, even just a 29-28 put spread for a quarter, though, it could be a decent way to play a little bit of that breakdown. Buying these for 40, selling these for 15. It's not a terrible way to execute off of that, especially if we get a minor bounce today. If we get a more major bounce, then it starts to set up for just consolidation. But that's a cheap way to trade for a little continuation break in ConAgra. I think that you'll see that, when you get a move like this down 10%, we're seeing people just pitch in the trade, and that could create more follow through if there is more positioning in it. And since we had a bullish trend, it seems potentially likely there. Let's go to the shippers. UPS is kind of chilling here. How about FedEx? Since I know I've got more time. Consolidating a bit here, just above the, or right at the 200-day moving average. So if the market starts to firm up and people are bullish on the economy, we may see FedEx start to fill up a little bit more. So I'll keep watching that one. It's nothing yet today, but I want to keep watching it given the economic input. Oh, nice. We're seeing a little bit more rally here in silver. So that's touching the highs. The implied volatility is on the high side for silver, but if this is going to get a little bit more push, maybe there is something here with silver for that reason. I've been looking at like a 28.31 call spread for the November. Maybe I can just rotate that a little higher to a 29.32 now, staying around that dollar, around $1 for the cash expense on a $3 wide vertical. Just seems like these precious metals want to continue a little higher, even though gold is sitting. What was that up? That's GameStop. Speaking of the meme stocks, people going to buy into GameStop? No, not really. Dollar is still firm, but pulling back. That's not a bad thing for the market. What's FXY look like now? Dollar yen had been up. That's still touching the lows. All right. Well, for now, I'm not sure I see anything off of those that makes me too excited. That may be a little bit of a concern for the precious metals. If FXY is weak, that means the dollar is strong relative to the yen. But a lot of that seems to be just more driven by China in the short term instead of the more long-term correlate. Oh, TMUS is one that I really wanted to look at again today too. Thank you for reminding me. So this is a stock that I do like here. You can see the long-term trend line. Turns out it doesn't get as solid on here, but it's quicker than pulling up and failing on our chart. But you can see that upward trend line. We're hanging above it. Now we're also creating so right now we're setting up an ascending triangle here that could be setting up a nice overall bullish trend. We do have the potential to be worried about the October 23rd earnings, but that's still 3 weeks, so I can trade it for a few weeks at the very least. If I want, I start looking back into January or February calls. Like a January 195. I'm basically needing 215 for that to break even though. Okay. 200s, I need 215 to break even. So I need to get that follow through and I need to have bullish earnings to justify a TMUS, but that may not be a bad way to just get a longer term holding if I'm looking longer term. Verizon earnings as well in 3 weeks. A little steeper on the upward slope here, testing those highs. I think if we can get above those highs, that would be the justification for getting in, because then it tells me the next leg is getting there. We're just hanging here right now, though, so I can wait for a quarter move in Verizon before I have to feel like I want to get in, but I can add it to my list of stocks to take a look at. T. Yeah, people seem to be liking what AT&T is doing overall. Getting rid of losers, keeping the winners. That's that's the nature of trading and companies as well, right? So AT&T back above yesterday's high, 22.15. We're 7 cents away. Let's just see if we can get a little bit more buying in there to start seeing a little bit more interest in it. People probably keeping some of these names a little bit to the sidelines because they're so focused on what's moving more. But at the end of the day, sometimes these stocks that aren't moving crazy can just be really nice compounding returns, compounding investment trades. So AT&T kind of fits in that bucket too, along with, like the stock I mentioned, ACN. Some of these names just look like more safe haven kind of trades, but with appreciating potential. What else do we got here? We got a couple minutes left. Any other names that people want to look closer at here this morning? Oh, MELI. Yeah, that was down a little bit today. How's she look now? Down 3%. So traditionally, what I said, 2000 maybe down to 1970 should be providing that support. So we're testing slightly below the waters there on that. For cheapening the entry instead of just having to buy the $2,000 share stock, we can look at an in the money call spread, which perfectly bounced off of it. Since we're going in the money call spread, I want to have some theta collection on it. 1940, 1960 call spread for $12. It doesn't look too shabby. It's only trading 60% of the maximum value, but there's clearly some volatility in here. But a 1940, 1960 call spread to trade for the balance, I think, could make sense in Mercado Libre. $1,200 for that, that which could go to $18 or $19 before I'd be looking to exit, versus buying into the stock and getting one share for more money would be a way to have some safety as well as some serious upside here to it. So that could be a good one there too. TLT, with the yield, we're still playing around with that 3.8 level. This is going to be correlated to FXY as well. So FXY falling down here to the 50-day moving average. Support might be around 63. We're pretty close to that. TLT, we're seeing us near support as well. So we may be falling below that here in the next couple of days. But as long as that support holds, TLT is trading on back to 98, 99, and then probably move on. So for me, that would be a stock trade, unless I think that it will happen before somewhat cheap options here by getting to like the 97.5 for 50 cents. It breaks even if we only get to 98. It triples if we get to 99. I don't know that I see above 99 as a high probability trade here in the next 2.5 trading days, but it could be a way to play a little bit with non-farm payrolls without having to put too much money at risk. So keeping it as a binary trade, if non-farm payrolls drive TLT lower, those are going to zero. So keep in mind when trading those short-dated, very short-dated move now type trades, it's zero if it doesn't play out. Okay. So for those, that aren't aware, for my schedule for this week, I'm going to do the close tomorrow and Friday. I believe Vlad will be back on for the open both days, and then I'll talk to him about next week. But I should be looking probably at Tuesday close, Wednesday morning, Thursday, Friday on the close again. So try to get here in the morning bell with you guys sometimes, but I know Vlad also likes doing the morning bell. So we try to split it up as best as we can to get a little bit of time for both of us, since I know not everybody can make both morning and closing bell. Some people only closing, some people only morning. So thanks again, everybody. Looks like we're seeing a little bit of a green day. So the fight is there in the market. Q's unchanged though. IWM small up, SPY small down, and a little bit of rotation back in some of these other names that I've been watching. So some of which I'm in and some of which I am just watching right now. So we'll see how that continues. It's nice to see CCJ getting continuation today though, after getting in yesterday. So I'll take that for what it's worth since it's still on paper. So, but hopefully that paper profit starts turning into a realized profit here. And I may turn this into, no, I won't turn it into a butterfly. I'm just going to stick with the 50-55 call spread and let that ride for now. All righty, everybody. I hope you all have a great trading day. Oh, one more that's moving this morning. Kraft Heinz. So that is testing the low end of the range. People that are looking for just kind of rangy trades, this could be an interesting one to buy, looking for 36. I treat that more like a stock trade, so, or a in the money call spread with 34 as my short strike. If there's enough premium. May not be enough premium to justify doing it that way, so it's probably more of a stock trade right now. So, but Kraft Heinz could be an interesting stock trade if somebody's looking for something just, basic without the options trade. Using 34 as the stop out and targeting 36. So it's risking 50 to make $1.50. So decent R&R from that perspective. All right. All right. Thanks again, everybody. I'll see you tomorrow afternoon. Hopefully we got most of your questions and ideas talked about. And like I said, always have, if you've got ideas that you want to throw in here, always feel free to do so, because I always love looking at new ideas. And I got a couple new ones on my list today as a result of you guys' comments. So I appreciate that. Thanks again, everybody. We'll talk tomorrow.